Welcome to Valkyrie Simple Finance. Understanding before investing. You've heard the terms stocks, ETFs, bonds, but what are they really, and which one should a beginner choose? These are not competing ideas. They are different types of investments, each with a different role. A stock represents ownership in a company. When you buy a stock, you own a small part of that business. Stocks can generate returns in two ways: price appreciation and dividends. Stocks can also fall in value. Individual companies can struggle or even fail. An ETF, or exchange-traded fund, is a basket of investments grouped together. If one company performs poorly, others may perform well. This is called diversification. ETFs can track entire markets, sectors, regions, or specific strategies. A bond is a loan. When you buy a bond, you are lending money to a government or a company. In return, you receive interest payments and your original money back at maturity. Bonds are generally less volatile than stocks, but they usually offer lower long-term returns. So let's simplify. For many beginners, broad market ETFs offer a balanced starting point. They provide diversification without requiring stock selection. Your choice depends on two things: how much risk you can tolerate and how long you can invest. Stocks represent ownership. ETFs provide diversification. Bonds represent lending. Each serves a purpose. In the next episode, we'll explain how to build a simple beginner portfolio, step by step. If you want to understand investing before risking money, subscribe and continue building your foundation.